Howdy, who all my stock market gamblers? Welcome today. I'm Tall Mike. So glad you're here. What do we got going on in the markets? Well, last week they got creamed, right? I mean, they just hit it with a sledgehammer and then hit it again. The markets are going down fast, right? It's the end of tariffs. The tariffs, it's all Donald Trump's fault. It's the end of the world coming. I don't see it that way at all. I really don't. Look at the case. We're not even down to bear market territory yet in the S&P. Is this the big one? Is it possible? Yes, it's possible. Do I think it is? No, I still don't think it is. Look at, I know the NASDAQ has gone down over 20%. Technically, that's a bear market, but that's not how I look at it. I look at you got to break through a channel, right? You got these channels going up, this big bull market, and we're at the lower end of the channel. We haven't busted through that yet. Yeah, the NASDAQ dropped 20%, S&P down 17% as of Friday, right? I mean, Friday's close. We'll see how it plays out today, but I'm actually predicting a big relief rally. Maybe not all today, but this week I am expecting a relief rally. You see, we've had those 2 big days down, right? We gap down and then we gap down again. And usually you come back up and you fill those gaps. Now, maybe they don't push this up to a record high, but it's not out of the question. This could play out many different ways, right? I mean, let's say the Fed came out with an announcement today for an emergency rate cut. What would happen to the market? We'd be off to the races, right? What if the Donald comes out with some good news on the tariff saying, hey, we don't have to do them anymore. We've negotiated these deals. Market goes off to the races, right? It is not out of the question that we even go to a new record high. Now, people would say I'm crazy here, but up at the record high, people would say I'm crazy saying it could drop 80%. I do think it's going to drop 80%, and this could be the start of it, but I don't think it is. I really don't think it is. I think you're going to have one more chance to get out of this market close to the top, maybe even at a new top. The gaps will be filled. Now, why don't I think this is the big one? I always talk about this, right? Now, okay, the stock market was just free falling, right? Free falling Thursday, free falling Friday, but I'm looking over at the bond market. Bond market's not free falling. Someone's in there buying them. And I think that's the Fed pumping liquidity into the marketplace. Now the HYG, it did come down to its 200-day moving average. I get that. It makes me nervous, right? Okay, I see that. I see the HYG. I get a little nervous. But I go over to the TLT, and that's going up. I'm going, well, that's not really a big problem yet. You see, when the big one comes, you're going to see these dropping like rocks. The bond market, along with the stock market, then we're going to the big one. Now, it's the start of it. Could we get to that bear market and just continue lower? It's a possibility. Not my take, right? They've got this channel going up. It's the big channel. It's like the 16-year bull market channel, right? You come down and we hit the bottom, hit the bottom, hit the bottom. Where are we at right now? We're right at that bottom. I think we're going to bounce off of it. Now, if we go back up to the top of the channel, we're going to be at a new record high. Now, if we break through the bottom channel and we stay down there, then we got big problems on our hands. Then it might be time to run for the hills. But I really don't think it's time to run yet. Now, I'm not big in the stock market. My thing's gold. Now, gold, everybody goes, but Mike, gold went down like $100. Look at gold has closed above $3,000 the last 3 weeks in a row, right? Those are the first time that gold's ever closed above $3,000 on a weekly basis. Done it for 3 weeks in a row. Yes, it was at 31.50. Now we're down around 3,000. Look, it's not going to be straight up. Now, why did gold go down? Gold went down because we had margin calls, right? When people are levered out, they got gambling on the margin. They're playing 3, 4, 5 times their leverage power, right? Okay, so they're gambling and all of a sudden they get a margin call. Well, what do they got to sell? Well, sometimes it's the gold market. So that does put the downward pressure on the gold, right? But it's my take that these people will soon be getting out of the stock market and running into the gold market. We're going to talk a little bit about that. Now, silver got hammered along with the market, probably even a little worse. Now, why is that? Well, they're expecting this big global recession now, right? I mean, it's inevitable. We got trade wars going on. We got the tariffs. Now, I'm not an expert in the tariffs. Now, here's what I know about them. When you put the tariffs on, the stock market drops, right? So people's wealth goes away. When you put the tariff on, prices go up, right? So their wealth goes away and prices go up. It's like stagflation on steroids, right? I mean, you're getting the high prices, but you're losing all your wealth. It's kind of a scary phenomenon. Now, we'll see how it plays out, how long the tariffs will stay on, how long these trade wars will go. But that's what's happening right now, and that's what's freaking out the stock market. It's down 17%. Now, granted, the Russell's in a bear market. It's down, I don't know, 25, 28%. That small cap stocks. In the NASDAQ, it's down about 21, 22%. Technically, that's a bear market. I think they're going to bounce. I think we're going to get the relief rally. And a lot of times relief rallies are really a lot of relief, really big, right? It could actually push this up to the top end of that channel I'm talking about, which would be a new record high. So I do think you're going to get one more chance to get out up around the top. Now, the reason I don't think this is the big one, right? First of all, it's the bond market. I look at the bond market, bonds are still going up. Means the Fed's in there pumping in the liquidity. What else did not go down and actually had a nice day on Friday? Anyways, Bitcoin, right? Bitcoin did not come collapsing down with the market on Friday. Very interesting, right? That tells me this isn't the big one. Because when the big one comes, believe me, Bitcoin is going to be leading the way down. And believe me, the liquidity will not be there for Bitcoin. Now, the reason Bitcoin didn't drop, it's already in a bear market, already down 30%, right? I mean, but it's going to bounce up too if the market comes back. And I do think the market's going to come back and head up higher. All right, let's get over and talk about this. I'm listening to this podcast. Anyways, I love Harry Dent. For those of you who don't know him, he's an economist just like myself, very passionate about economics, and I like that. I like to see that. Right now, he doesn't get a lot of things right, so he gets a lot of grief from his viewers in the comment section, but I love Harry. I got to give him some 2 thumbs up props. Now, we don't agree on a lot of stuff. Actually, we don't agree on most things. Now, one thing we do agree on, we both agree that you're going to see the NASDAQ drop about 80% when the big one comes, down about 80% from its highs, right? Now, that's going to be scary. Now, what he's saying to do is to go into the bond market, right? Because he's going to say the bond market is just going to keep going up, right? Everybody's going to pull their money out of the stock market and they're going to put it into the bond market. See, this is what he doesn't understand this. See, the bond market is the problem. The debt is the problem, and that is the bond market, right? The debt is the problem. The debt's what's going to bring all this down. The debt's what's going to drop that S&P 60 to 80%, going to drop the NASDAQ 80%. It's the debt market. The debt market is the most unsafe market right now because they're just going to continue to print money. My take is that they're going to come out of the stock market and they're going to go into real money because that's where the reset will be. They're going to flow into that gold market. Now, Harry's take, this is very fascinating to me. I love you, Harry, but gold is not going down to 1100. Now, Harry says it's going to plummet down to 1100 by the end of 2026. So we got this year and next year, and after that, it's going to be down here at 1100. So all you people waiting to buy gold can get it way down here at 1100. Now, personally, I don't see that happening. I see gold going the other way, right? I see gold being the safe haven asset. I see gold being the answer where the bonds are the problem. See, the bonds are the problem, and they're going to start circling the drain. It's called the death loop, right? The death loop. All right, so let's take a look at the bond market right now. Our country, we got? $37 trillion in debt, right? Forget the unfunded liabilities. That's another 120 trillion or so. So just forget about that. But you got 37 trillion. 28 trillion of those come due in the next 3 to 4 years, right? So we're going to have to find a buyer for those. But you know what? We're going to have to tack more on that because we don't have money to pay the interest on those, the $37 trillion of bonds. So we're going to have to sell some bonds just to get money so we can pay the interest. So that 37 trillion number is going to go to 40 trillion, 45 trillion, 50 trillion. It's going to continue to go upward, right? That's our debt. Now, gold actually tracks tax debt. As the debt goes up, gold goes higher, right? But as the debt goes up, and people are going to start to realize the United States cannot repay this debt without printing more money. The largest Ponzi scheme in the history of the world right now, right, is the debt market. They just keep printing the money and the debt keeps going up, and that's why gold's going to keep going up. Now, if you think they're going to stop printing money, if you think they're going to pay off the debt, get out of gold. Maybe, Harry, you'd be right then. Maybe it'd go down to 1,100. But as long as we keep printing money, gold's going to go much higher. $3,000 is very cheap for gold. Now, it sounds like a lot of money, and yes, silver's the better buy. Silver got hammered. It's an industrial metal, right? So it got hammered. That worldwide depression's coming. Everybody's hammered the silver market. Look at right now. Very, very fascinating. I love this stuff. I get obsessed with it. But you got silver closing down below $30 on Friday, and you got gold above $3,000. That's 100 to 1. 100 to 1. What does it come out of the ground at? Comes out of the ground at 7 to 1. What if it reverts back to 7 to 1? What's the silver market going to do? Oh my God. Now I know I get the haters in there. Silver's dead money. It's never going to do anything. Matter of fact, they just had the silver squeeze day. Just last week, I think it was. Everybody's supposed to go out and buy physical silver, and that's going to make the price go up. Price dropped about $4 on that, right? I mean, well, because of the tariffs, of course, because we're going into this worldwide recession. Okay, maybe, but at 100 to 1, silver is the buy. Now, silver is cumbersome. It's bulky. If you're putting $1 million, I got a guy, he emailed me. He's putting over 100 grand in silver, and he was wondering to buy the 100-ounce bars or the 1,000-ounce bar. I told him, you don't want bars. You don't want bars. You want the coin. The coin of the realm is what you want. You want monster boxes, right? They're 500 ounces of silver eagles printed by the U.S. Mint, recognized everywhere around the world. When this gets bad, you just take those and you sell them. Look, you got those big 1,000-ounce bars or 100-ounce bars. Nobody knows what's inside that bar. They got to drill in to test it. Everybody recognizes the silver eagle. The coin of the realm is what you want. This is what I recommend you buy. This is what I recommended he buys, right? But you get over 100,000. It's very, very bulky, very cumbersome. What is that? You need about 5 or 6 monster boxes, right? 3,000, 4,000 ounces. I don't know what you need. I'd have to do the math on that. But anyways, monster boxes are what you want. But you get to $1 million level, it's hard in silver, right? You got to go with the gold market. And gold at $3,000 is very cheap. Harry's wrong. It's not going to come back to $1,000. $1,100. I'm sorry, Harry. You said $1,100 by 2026. Okay, we'll see how that plays out. You say get into the bond market. I say run. Run from the bond markets. Those are going to be what's in free fall when the whole market's coming down, 60 to 80%, right? And what happens when the stock market comes down 60 to 80%? Now, people in the real estate market, I'd be really nervous, right? They say, but Mike, back in the dot-com boom when the NASDAQ crashed, the real estate market took off, and then we created that bubble. The dot-com boom crashed in 2000. Real estate took off to 2008. But right now, we've got a double bubble. Double bubble's going to be coming down. I'm telling you, if you're in your house, it's going to be coming down right along with the stock market. Stock market drops 60 to 80%. I bet your house is down at least 30 to 40% against real money. 80% already down 50% against gold, right? Gold is real money. You already lost 50% of your purchasing power. If you did what Billy Bob did, he got out, man. He got out back in 2022, put his money into gold. Gold took off, right? Took half his money. He could buy his house back. He don't want it back yet because it hasn't bottomed out yet. Gold's not done going up yet, but he could do that, right? He'd pretty much doubled his money already, right? Just because your house has lost 50% of its value in real money, and it's soon going to do it in nominal money. And that's where it gets a little scary. Now, people are freaking out in the market, right? I mean, there is maximum fear in this market. Everybody thinks this is the end of the world. Everybody thinks Donald Trump, he's the devil, man. He's the devil. It's his fault. I'm telling you, this market was ready to come down one way or the other. Yeah, he put the pin out there with the tariffs. That's pricking this bubble a little bit, but I'm not saying it's done yet. I'm saying we're going to bounce. I'm saying big relief rally this week Big relief rally. That's just my take. Maybe it just goes into free fall. That's the downside, right? I mean, it's possible. I don't think it's a big one. Look at Bitcoin. Look at the bonds. Watch how they're doing. If they're in free fall, then we could be going into the big one. But I don't think so. Not yet. I think the relief rally's coming. I think we'll bounce at least back up to the 200-day moving average. And if we keep going, we'll probably pull back from there and then bounce up. And we could still get one more chance to get out near the top or at a new record high. Just my take. I'm Tall Mike. You like this stuff? Give me the thumbs up. Get out there, everybody. Enjoy the day. Bye-bye now.